Hi, this is Sarah. This presentation was originally given on November 4th, 2024 as part of Lesson 9, Dependents, Filing Requirements, and Filing Status of the Self-Study course. So we're going to be talking about the qualifying child or relative using the qualifying child or relative resource tool. Having a qualifying child or relative makes a taxpayer eligible for some tax benefits. And the qualifying child or relative may be a dependent, but is not necessarily a dependent. So first we're going to look at the simple case where someone has a qualifying child who is a dependent. This is the typical situation. We do want to remember that there are certain criteria for this classification. One is that the child needs to be a U.S. citizen, U.S. national, or U.S. resident alien, or a resident of Mexico or Canada. They have to also have the correct relationship to the taxpayer, be in certain age categories, live more than half the year in the home, and they must not have provided more than half of their own support. In order to be a qualifying child, the relationship with the taxpayer must be that the child is their child or their stepchild, or their sibling, including a half-sibling or step-sibling, or a foster child, or a descendant of any of those people. So a grandchild counts, your niece and nephew, where descendants of your siblings count. In order to be a qualifying child, you have to be 18 or less at the end of the tax year, or 23 or less at the end of the tax year if you're a full-time student during some part of any of 5 months of the year, or you can be any age as long as you are permanently and totally disabled. There's also a rule for the non-disabled children to be younger than the taxpayer or one of them if the couple's married filing jointly. So the test for support for a dependent child is that the child does not provide over half of their own support. This is different than the dependent that we'll talk about later. But in this case, as long as the child doesn't provide more than half of their own support, then they count as a child. So this includes even if, say, a child actor makes $50,000, and as long as that's put into an account, say, for college expenses later, that does not count as them providing their own support. Scholarships are also not counted as a child providing their own support. However, Social Security benefits may be counted, and the special case of welfare benefits that are provided by a third party or parent, those are also not provided by the child. There is no income limit for a child per se. And the child does need to have lived in the home for over half the year. However, living in the home includes temporary absences, including going to college or being in juvenile detention. So as long as the home is sort of their home address, it counts as them living there. So the benefits to a taxpayer with a dependent child are many, including being able to claim head of household status if the child is in most of the relationship categories other than grandchild or foster child. Additionally, it gives you access to the premium tax credit, the child tax credit, the earned income credit, the education credits, the child and dependent care credits, and also being allowed to take medical expense deduction. All of these benefits are listed in box 35 on page 2 of the Qualifying Child or Relative Resource Tool. And if you go through page 1 and then page 2, you get there if you sort of take the ordinary situation of someone just having a child who is a dependent. So the other kind of dependent would be a qualifying relative who's a dependent. And this includes people who don't fall into the child category, either because they're not the right age, don't have the right relationship, or don't meet the other criteria. The dependent relative is a very different thing in that the person can't have a gross income over $5,050. So most people who live with someone else in a house are not their dependent because they would get more money than that from some sources. The other thing is that the support test is much different in that dependent relative needs to be supported by the taxpayer. That is, they need to get over half their support from the taxpayer. And then the qualifying relative needs to either be related in a way which is on the list, which we'll go over in a minute, and have lived with the taxpayer over half the year, or they need to have lived with the taxpayer the entire year. The only exception to the half-year rule is the taxpayer's own parent, who can live in a different place as long as the taxpayer provides over half their support. So the qualifying relative list is very specific. It includes children, stepchildren, foster children, or descendants of them. It includes siblings, half-siblings, or a son or daughter of them, which would include the niece and nephew again. The stepmother, stepfather, stepbrother, or stepsister, but not other members of those families. Your in-laws, that is mother-in-law, father-in-law, brother-in-law, sister-in-law, son-in-law, daughter-in-law, again, not other people in those families. Your mother, father, or ancestor or sibling of either of them. So that includes aunts, uncles, grandparents. Notably, people who are not included on this list are your cousins, somebody like your mother-in-law's brother, your girlfriend's child, and there are often test questions about that case, or a just random family friend. Using the qualifying child or relative resource tool, when you use chart 2, which starts on page 4, you look at the qualifying relative and go through the boxes. If you get all the way to box 24, this shows the benefits if the taxpayer has the qualifying relative. And this would include anybody who can be a qualifying relative. So you can get the credit for other dependents, the child and dependent tax credit, the education credits, medical expense deductions, and a premium tax credit, which is against the medical premiums. The one benefit that is not in box 24 but is in box 25 is being head of household or qualifying surviving spouse. And for that, you have to have provided more than half the cost of upkeep of the home. And in addition, the person has to actually be a relative on that list and has to have lived with the taxpayer for more than half the year, unless it's the taxpayer's parent. So we'll look at the special case of when some unrelated person might count for any of these benefits. So unrelated means not on the list. So it still might be your cousin, but it's not on that list. They have to have lived with the taxpayer the entire year. Their gross income needs to be less than the $5,050. the taxpayer has to have provided over half of their support, and under no circumstances will they qualify the taxpayer for the head of household. Again, that's Resource Toolbox 25 compared to 24, which you should take a look at. Notably, our intake form asks people to list anyone who lives with them. And some people take that sort of literally and list like a bunch of people, and it's very unusual that any of those people are actually dependents. So we're going to look at the case of when can grandma claim the child as a dependent child. So first of all, if there is a parent who can claim the child, grandma can't claim the child unless the parent grants permission. The child must meet the relationship, age, residency, and support tests. And grandma's AGI needs to be higher than the AGI of any parent who might be able to claim the child. So, for example, if you have a woman who's not married with a child living with her mother, if the woman has a higher income than her mother, then the mother cannot claim the child even if she gives permission. And now we'll look at the case of which parent claims the child in the event that the parents are not living together or not married. Typically, it's the custodial parent who claims the child. After that, they get very nitpicky about the rules with this, and you can tell that that reflects some very nasty divorces. If both parents were to claim the child, the IRS will give the claim to the parent who lived with the child for more days, and if the days lived with each parent's even, then they'll give the claim to the parent with the higher AGI. Meanwhile, usually what's really going on is that there's an agreement about who can claim the child and for what benefits. So overall, you can see that the rules for qualifying childs and relatives and what benefits they make the taxpayer eligible for are pretty complicated. And we definitely recommend using the qualifying child and relative resource tool box by box for the majority of cases that are not a really straightforward, child lives with parents and is a small kid. There are additional resources, including the dependent section of the 4012, the 4491, which you'll remember is sort of the written link and learn that it was the training before this self-study course was available, and the self-study counselor training exercises. And do remember that there's likely to be a test question on the grandparent being able to take a child as a dependent on the exam. So you should make sure that you go through the resource tool when you do that question to get to the right answer.